There are a lot of factors that determine the best place to incorporate your offshore company. There is no one size fits all. And I understand that everyone's looking for that magic bullet where I just say, go to Kathmandu. But in this video, I'm going to explain 9 factors and hopefully get you thinking about what you need to be considering when you're starting your offshore company. Hi, I'm Andrew Henderson. Let's get started. Factors that go into deciding where to start your offshore company. Obviously, when we talk about offshore companies, people generally think either zero tax or very low tax. That may or may not be the case, but I'm going to assume that we're trying to reduce tax as much as possible. If you think I'm missing a factor, if you have an idea, if you have a question, leave a comment below because I want to hear what you think. Factor number 1 is what you sell. So occasionally someone will come to me and they say, hey, I'm selling some kind of, herbal supplement, or I'm a affiliate marketer for casinos, or anything that, I think we had one guy who said, I'm in the porn business. This can be an issue. Now, there's different ways to separate your company into different structures. Just because you have one company where you live right now doesn't mean it has to be one company forever. There could be a marketing company, a staffing company, an operations company. But if we're talking about casino products, for example, there are going to be some of these jurisdictions that are more conservative. If we're talking about even cryptocurrencies, some of these countries, they don't want to be involved with stuff that involves cryptocurrency. So if you're high risk, a lot of the traditional companies aren't really going to be into that. And so while the company registrar might not matter that much, the banks that come with that might not like it. For example, in Belize, banks are very conservative and they don't want to be taking anything like porn or anything like that. So what you sell is important, and that has to be considered. Number 2, where you sell. This is something I always ask people when they come. I go through a whole profile of who their customers are, where their customers are located, how they're marketing to those customers, and what their presence is in those countries. Now, contrary to what a lot of people believe, people sometimes flip this. Contrary to what a lot of people believe, you can sell into many countries, including the United States, and ostensibly not pay tax. It depends on how you do it, but you can ostensibly sell into a country, and if that's all you're doing is just shipping this stuff in, that may not cause an income tax issue. Sometimes people flip it and they say, well, hey, what if I live in the United States and I sell all of my products outside of the United States? No. The issue isn't selling it to the US. The issue is that you're in the US. That's the bigger issue. But where you sell could be an issue, because some countries, if you're shipping stuff in, depending on what percentage of your business that is, that could be an issue. If you're performing services, we recently had someone who came and said, I'm doing live yoga retreats. Where you sell them, i.e. online, is one thing. Where you're holding the services, in essence where the sale is being performed, is another thing. So where you sell and the nature of what you're selling is going to be very important. Number 3, how you're paid. So if you're working with a company like an Amazon, where they just send the money into your account, that makes things a bit easier, although having like a US account or a UK account could be easier for getting payments from companies like Amazon. If you're receiving money, such as affiliate marketing or consulting, anything where people just wire money into your bank account, that's really easy, and it makes you a lot more flexible. You have a lot more choices when people are just wiring money in. When you have fewer customers, when you have customers who just trust you, i.e., the affiliate marketing exchange, they're just sending you the money. But if you need PayPal, if you need merchant accounts, this is going to be something that you want to very strongly consider. Now, can you set up your company in the BVI and then have some kind of billing company or a subsidiary somewhere else? Sure, you can do that. That's going to cause more complexity. It's going to add some tax. But where you set your company up, depending on what kind of company you sell, and this comes back to what you sell, depending on what kind of stuff you're selling, you may be able to set up in, let's say, a Hong Kong and avail yourself of some of the merchant accounts there. They become notoriously difficult. There are a few options now. They do have Stripe in Hong Kong now. Some people have had success with that. Some people haven't. So if you have a lower ticket product and you're just selling ebooks or something like that, that could work, and maybe you do the merchant account in the offshore company. Many offshore companies don't really have a lot of the ability for a lot of merchant accounts, although there are high-risk merchant accounts. There are things like 2Checkout, there are other services. So it really depends on what your product is, where you're selling it, how much the price is, how much, and then how you're going to get that money in. I can tell you a lot of horror stories of people who incorporated in the Seychelles, had some kind of offshore merchant account, and they ended up getting their account frozen. It took them months to fix it. So you want to make sure you factor in how you're going to get paid first. Too many people have called me saying, I got my company, I got my bank account, but it's been a year and I can't get any money in because my customers can't pay me. So that's important. How do you get paid? The fewer payments, the more trusted the parties, the better, the easier it is. Number 4, where your employees are. This is a big one. Okay? This is a big one. If you go offshore and you have employees sitting in some, company somewhere working for you, creating a tax nexus for you in that country, that's an issue. I had someone recently who was in Australia, and they had people doing customer service in Australia. I said, this person is potentially causing you some problems because they're engaging you in business in the country. And so we want to figure out a way to kind of peel them off and put them in a separate structure. That creates more complexity. So if you're just starting and you're going to be hiring employees, it's always easier to follow my advice on hiring contractors, hiring location-independent teams, whether those are nomadic workers, whether in a country where the tax laws are less restrictive and they're okay with people working. But if you set up, your management team in a high-tax country and they're your employees, that's going to be an issue. Number 5, where your offices are. Same principle. Okay? So again, if you're just selling stuff on Amazon, if you're selling stuff through e-commerce, if you're doing consulting and it's basically going in your backpack and you're just traveling, that makes things a lot easier. But I can tell you, what if you have a mailbox somewhere? Generally not a problem, but I can tell you if you have a mailbox in Texas, they're going to send you a letter till the end of your days looking for $50 because you don't need to file a tax return. Minor inconvenience, sure. What if you have a bigger office? Each state, for example, California, if you're in the United States, I don't want to have a Regis office. I don't want to have a virtual office in California. I don't want anything tying me to California. And if you have a real office, like you have people putting stuff in boxes in a warehouse, you have people sitting in a tower somewhere, even if it's like a shared office, if you have people sitting there, if work is being done there, stuff is being shipped from there, that could potentially be an issue. And that's going to affect where the offshore company needs to be based and really what the entire structure needs to look like. It's okay to have any of these traditional offshore companies, but you're going to need to structure those offices somewhere so they don't infect the rest of the entire company. Number 6 we discussed, which is where your warehouses are. Okay, so generally it's easier to use third parties. Okay, if you can use a third party to fulfill your stuff, that's better. It's still something that I would generally look at to make sure there's not a problem. But if you can have a third party fulfilling your stuff rather than people putting stuff in boxes that work for you, that are your employees at your facility, you're going to be a lot better off. Point number 7. Types of income. Okay. Obviously, not everyone who sets up an offshore company has active income. So what are other types of income? Passive income, royalty income, intellectual property. Intellectual property is one where people oftentimes think they have IP that they really don't. A lot of small businesses really don't have that much IP. It's not the same as Starbucks licensing the name Frappuccino to itself. It's a different kind of thing. But what type of income do you have? Because there are some places that, like Hong Kong, where they're a little bit more easygoing when it comes to passive income. But when you talk about like royalties and IP and stuff like that, some countries really get into your case. The traditional offshore IBCs really probably don't care as much in most cases, but there are some offshore companies where, depending on the type of income, it's going to be an issue. Okay, so point number 8, now to point number 8. Tax treaties with other countries. Not something that we deal with a lot here at with Nomad Capitalist. Because generally, my advice is, if you're a small business, if you're a one-man band, a two-man band, a small company with some location-independent people working for you, we don't want to be doing a lot of tax treaties. We just want to be doing slash and burn, move the company offshore, move you into a personal low or zero tax situation and be done with it. But depending on what you're doing, you might want to consider tax treaties with other countries. Again, this would depend on if you have offices, if you have warehouses, there may be a possibility to involve tax treaties and reduce your tax by doing that. People, Mauritius is one of the countries people have talked about a lot, using tax treaties. Not something that we deal with very much. For a larger company, or depending on your situation, may be more important. Last one is your personal tax status. And so that is, where do you pay tax? What's your citizenship? That will sometimes have an impact. Now, what you've heard in a lot of this is that up here, if you're selling something that's controversial, some of the traditional offshore companies may not be a good fit for you. For a lot of the other stuff, the traditional offshore companies will be perfectly fine. The challenge with traditional offshore companies is this, how you're paid. I would add on to how you're paid is how you want to pay other people. If you have a Belize company and you get an account in Belize or some other tiny island somewhere and you want to send money out, there are times when the people who are getting the money are going to have restrictions. I know that we've had some people who came with a Cyprus company, still in the EU, but Cyprus, they would send money to their vendors, and their vendor's bank or the intermediary bank was like, Cyprus, let's look into this. This looks like it could potentially be problematic. So how you're paid and how you're paying are issues, and that's why the traditional IBCs, international business companies that are the offshore vehicles, they don't really work as well because you don't have as much operational flexibility. So what I say is you want an offshore, onshore hybrid. You want to get as much onshore as possible in companies like Hong Kong. I'm not saying Hong Kong is the answer for everybody because there are some ways in which it wouldn't work, but I don't want to be traditionally offshore anymore in 2019 and beyond. I don't want to be just offshore with my Nevis company, with my St. Lucia bank account. To me, that's just not going to work anymore. I want to know what your comments are. Leave a comment below. There are additional things. There are new things I'm coming across all the time. There are other things, but these are 9 of the most common questions you want to ask yourself. Personal tax status, by the way, where do you live? Okay, that makes a difference. As we always say, if you live in a high tax country that has a controlled foreign corporation law, all this could be moot if you're just going to go and let your personal tax situation ruin the company for you as the owner. So those are some things you want to take into account. Leave your comments below with any questions or thoughts you have. If I missed one, let me know. And good luck with your offshore company. Hi, I'm Andrew Henderson from Nomad Capitalist. I wrote this book, which you can find on Amazon, to distill a lot of the stuff we talk about in these videos and a lot of the stuff I've learned over the last decade plus traveling all around the world, teaching you about how to legally reduce your taxes, build your personal freedom, and create wealth faster. Definitely get a copy of this book if you want to learn more. Now, if you want to watch more videos, make sure you subscribe to our channel and make sure you click the notifications bell so you never miss one of our new videos with more tips on how to go where you're treated best. And if you're already a 6- or 7-figure entrepreneur and you'd like to put these strategies in place for yourself, go to nomadcapitalist.com and learn about how I can help you.